Good afternoon. This is Brian Shannon from AlphaTrends.net. It is Thursday, the 7th of February, 2008, and the market's closed. We had another volatile session, and at the end of the day, we did finish with some gains. So the S&P 500 finished with a 73-cent gain, good for about a 0.5% or so. As you see, the 132 level was tested and seems to have held for now. We did get a little bit more volume today, so that's somewhat bullish, but you know that's about the only thing you can really point to besides the color of the candle that's bullish, because everything else on this chart is clearly still very negative. We've got the declining 10-day moving average below the declining 20-day moving average, below the declining 50 and 200-day moving averages. We've seen this market rally up to a prior level of support and then find resistance near that 140.5 level, and it just continues to be a bearish environment. One look at this weekly chart tells you that it's still very dangerous to be trading from the long side. I still would prefer to see a test of these lows before we can really have any confidence in any potential buys. And looking at the intraday action, again, it's just a clear downtrend, just a mess in here. You could point to maybe this little inverted head and shoulders pattern developing. However, we've got a declining 5-day moving average, so you want to look at this market as guilty till proven innocent and not put much weight in that. In fact, what you want to look at more carefully is something that looks like this, more like a topping head and shoulders pattern, and maybe getting up towards that 5-day moving average near the 135 level could put the higher low in that would form that right shoulder, and then we could see the market break down on the 30-minute time frame. You can see clearly that 132 level that I've been talking about the last couple of days, how important that is. If this market breaks below that 132 level, I think you're going to see a complete give up and just a lot of frustrated selling, similar to what we've been seeing in a lot of the individual stock actions. So I think we're getting closer to that day, and if you're trading the long side, again, the market was up today, but it was a real choppy day. It continues to be a day trader's environment. We've still got a lot of earnings to work through as well, so be careful in that regard. The semiconductors did look like they were going to come down and close to test those lows that we had seen about 3 weeks ago, and that level down here, not 3 weeks ago, but about 2 weeks ago, down near the 335 level. The market gapped lower. We got a rally within a downtrend, and this market, again, on the daily time frame is going to need a lot of time to heal this damage in here. The IWM Russell 2000 was up $1.15, continuing out to outperform on a relative basis. It gained 1.67% today. The clearer level of support in here is about 67.5, 68. Actually about probably 67 3/4, but we'll take a look at that in a moment. We do still have a declining 50-day moving average, so guilty till proven innocent. We've seen this level of resistance become support near that $73 level as well. So to have any faith in any upside, I'm going to repeat myself and say that we need to take out this 73 level. We've got some what could look like higher lows in here, but would have to get above that level at 73 and hold above there for a day or so before we could have really much confidence in the long side of this market. Looking at a 30-minute time frame, we've got a downtrend here that we saw clearly starting to develop with this lower high earlier in the week, and then it's been lower highs and lower lows. Now it looks like maybe the buyers started to gain a little bit of control today. However, and by that I mean it made a higher high in here intraday and also a higher low, but it comes within the context of even an intermediate term downtrend. And again, you want to focus on the direction of the 5-day moving average, and the market still is below that declining 5-day moving average. We can look at this market too as maybe tracing out a head and shoulder top. So if this market is to break below, really, you could look at it 67.5 or so, or you look at this little trend line that seems to maybe be emerging with the beginning of that trend line here, a little support there, and then support once again today. If it's to break below this trend line during the day, then you could see this as maybe a head and shoulders pattern, and we're possibly and that's where you would want to give the benefit of the doubt to the sellers in here, that the more likely scenario would be if we see a continued rally, that maybe it fails near that 71 level with a near the declining 5-day moving average, and then takes out this trend line. Maybe he finds a little support in here, but then comes down and tests this these lows that we'd seen prior to the Fed. Again, this market is the one that does hold above the level that the Federal Reserve had cut rates initially right here, and then again 4 days later or 3 days later, whatever it was. But the average price since the Federal Reserve has cut interest rates twice was $69.37, and here we are at $70.11. This, a lot of just mixed messages, but overall, we're still in a bearish environment. So if you're trading the long side, repeat myself over and over again, you've got to be doing it on the very short-term time frames because the risks remain to the downside. News and surprises, as we've seen, tend to follow the direction of the trend, and not all news is being treated the same. Sometimes we rally on bad news, and other days we sell off on bad news. So you've got to be really selective in this market. It's a frustrating tape a lot of times, but just stay disciplined, keep your share size reasonable, and you'll still have a chance to serve for when it does become a little bit easier and trends become clearer, that you'll still have cash to be able to take advantage of that. If you're going in there and just basically doing compulsive gambling type trades, then in trading too big a share size, when this market does finally turn and it makes it easier for the longs, if you're just a long side trader, then it's going to be a time you want to have your cash available. The clear level that the buyers will need to clear or get above for any faith in long side trades is above that 46 level. But even then, we've still got a declining 50-day moving average, which is below a now declining 200-day moving average as well. And that indicates some longer-term selling pressure that just does not, turn itself around very quickly. It takes a lot of time for that to heal itself, this type of damage. Now, this market, it would have been nice to see a little bit further washout and maybe take out these lows, but we did have a reversal with big volume, and we saw a lot of volatility in the market today. We saw this, real big rally in here, but then it completely failed, got back below VWAP, and then towards the end of the day, the buyers did regain control. It was good for a 0.7% gain today here, so matched about the S&P 500, but still clearly lagging the smaller cap stocks with that Russell 2000. I'm still hoping that we can see a move below these lows. Take this out, get that kind of little capitulation, and then maybe it can turn higher for a trade. But there's still just nothing in here that indicates bullishness. The level that I pointed out yesterday, as far as there might be a potential breakdown coming at that 43.50 level, and that's where, again, the more often it's tested, the more likely it is that it'll break. And then once that level is broken, then it tends to act as support on the retest. And that's what we saw today. The market came up a little bit above there, but it still didn't clear the higher high here, and we still got this declining 5-day moving average. So maybe the market's trying to find a little bit of stability in here. Again, I'd prefer a little more washout action, but with a declining 5-day moving average, don't trust this market still. It remains just a very volatile, tricky environment, and you have to be disciplined first.